Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend Peter St Onge. He is an economist, former MBA professor, and a daily contributor to the Wall Street Silver YouTube channel. Welcome back, Peter.
Thanks for having me back, Ivan. Don't forget a former bartender. That is when I peaked.
That was the peak of your career, hey?
It really was. That was when I knew what I was doing.
That's awesome. Well, it's great to have you back on to Wall Street Silver and having a little bit of a longer session with us. Peter, I wanted to ask you, and a lot of people are talking about this on all over the forums, is there's 33 trillion in government debt and the 2 trillion in annual deficits projected for the next 10 years, taking us to almost 53 trillion in debt. And this is just an estimation. If we have a recession where taxes decline and spending increases for bailouts and so forth, what happens to the debt bubble at that point? What's your views?
That's one of the huge concerns. And I've got a video upcoming on this. We're basically running wartime deficits in peacetime.
Wow.
Right. So normally, in theory, the way it's supposed to work, according to our Keynesian ruling class, is that in the good times, we have surpluses, or at least we break even. And then in the bad times, we can roll out the big deficits, because what happens in every recession is that millions of people lose their jobs. They need social payments. And at the same time, taxes are drying up because nobody's making any money. Right. So if you don't have any income, you don't pay taxes. The capital gains, can even go to zero if the markets are all down. So in every recession, you have this explosion in the deficit. And the problem right now is that really over the past 10 years, right, it's been, setting aside the COVID moment, it's been, 15 years now since we had a normal recession. That was the 2008 crisis. And all through that period, that was in theory the good times. But all through that period, they were running massive deficits. So they basically ratcheted up the deficits during the 2008 financial crisis.
Right.
And once those went on for a year or two, they kind of moved it and liked it that way, and they just kept it. All right. So at this point, what we're doing is building up recession level deficits in the comparatively good times. So that means that when the recession hits, it is going to be absolutely off to the races. If we go by past recessions, during the actual recession, the deficit jumps by about 2 or 3 trillion on top of what it started at. Wow. So if we take that with today's numbers, we could be looking at a deficit hitting 3 or 4 trillion. That is starting to get into goofy numbers, right? You're talking double digits of GDP in annual deficits. And if we go back to what happened in the previous recessions, that is going to become the new normal. They jack it up during the recession, and then when the good time comes, they might give back half of that. So right. Each time it ratchets up bigger and bigger, meaning you've got huge hunks of the economy being handed over to the government to be squandered. And by the way, of course, a lot of that money goes to hiring bureaucrats whose literal job is to go and choke the rest of the economy. So we are setting up for disaster.
Yeah, it sounds like a trap, like a never-ending trap,
Yeah,
Peter.
yeah, exactly.
And I was reading too, delinquencies of certain types of debt is starting to rise at alarming rates, and more Americans are falling basically behind on their car loans and credit card payments that any time in more than a decade. How alarming is this?
Yeah, so the numbers are funny right now because all of the financials on paper, they got really good during the pandemic because they handed out all these trillions of dollars, right? So delinquency rates went to like almost nothing. Credit card delinquencies, people were paying down their credit cards. They looked very prudent. Now, of course, what happened is that they just stumbled into, what was it, like $3 trillion that was handed to them in stimmies. And so that means that, now we've got rates soaring on especially car loans and mortgages. The interest rates on those have exploded. That's hard for people because their incomes have not kept up with inflation. So up until now, like the Bloombergs and the Wall Street Journals are saying, well, it's normalization is what they call it, because it's coming off that really low base during the pandemic. Right. Now, what's interesting is that one of the weirder effects during the pandemic is that low credit rating people, okay, they paid down debt because they got all these stimulus payments. And so their credit ratings got temporarily attractive, right? If you're paying down your credit card, then that's gonna look like a green flag to lenders, okay? So now it turns out that all these banks handed out loans that they should not have, right? In other words, whatever that person's likelihood to repay a loan, they kind of temporarily jumped into the wrong category. They looked like they were, not a risky person, but that was just the stimulus talking.
Right.
So now you've got this whole new raft of bad debt that the banks don't even know what it was, because the credit ratings were not telling the truth, right? Because you had 3 trillion rush in, looked like everybody, all the people who normally don't have 2 dimes to rub together, all of a sudden were running around thousands of dollars. They look good from a credit perspective, but they're not going to pay back.
Yeah, absolutely. So it's just you don't know. It's all diluted, basically. You don't know exactly what
that's
the
what it
numbers
is,
are.
right?
Yeah. And what do you see? Like a lot of people on TikTok, I've been watching some videos recently this week, Peter, that a lot of people are saying we're heading for another Great Depression, or basically worse. We're in a silent depression, and people aren't talking about how bad it is because we're currently earning less we're currently less and spending more adjusted for inflation than at the worst point of the Great Depression. Are we heading for something worse than that, or like just basing off the numbers, people are saying it's pretty brutal?
That's always the question. And, most of what an economist like me talks about is how the government screws things up. And we want to zoom out and consider that, like, why aren't we all eating cat food at this point, right? After 100 years of the Fed and the government's, horrible policies, why aren't we eating cat food? The reason is because the counterbalance to the idiocy of the government is the regular people, right? So people hustle, they build businesses, they plan for the future. That is always the force for good, right? That's the reason why, we're not living in the gutter at this point. So in terms of what happens next, the government is they've just about screwed every pooch they can.
Right.
The, hiking rates, that was the fastest rate hike since the 1970s. Economists of every school know that rate hikes that fast is always going to crash the economy. Now, the question is, what are we crashing off, right? So in other words, because of the lockdowns where we kind of owed this big bounce back, okay, and so the crash is it just means that the bounce back is not going to be very impressive, and we're going to be kind of trundling along around zero the way Europe is. Okay, so that's one scenario. That's like the soft landing scenario. And then the hard landing scenarios say that we're going to do what recessions like this have done in the past. And, the closest analog is the 1970s. You had double-digit inflation. They hiked rates really fast. But the thing is, what they didn't have in the 70s was kind of debt that we have today, right? I mean, they had something like 15 times less debt. Even adjusted for GDP, the debt was much, much smaller. So that means that what we could be looking at here is a combination of the 1970s, which was a dire recession, along with a 2008 style financial crash. That would be the hard landing scenario. That could be something that we have not seen in our lives.
And where do you see gold and silver play out? As how important is that precious metals hold as the rates start to continue to raise, or whatever the Fed does next and Powell does next? How important is silver and gold right now?
Right. So probably the biggest factors in gold and silver is what people think is going to happen to inflation. And on the one hand, I think we can expect inflation to continue. A big reason is the deficits are utterly unsustainable at this point. China and Japan are both selling. The Fed has already said that it's going to sell debt. There's no way it can stick with that, because when you're pumping out $2 trillion or maybe $4 trillion deficits, and your main buyers, Japan and China, are not in the game, somebody's got to buy it, right? If the Fed comes in and buys up that debt, then we're off to the races to inflation. Now, the question at that point for gold and silver prices is, what did people expect, right? In other words, how much of that future inflation is already expected by gold investors and silver investors? Because gold and silver investors tend to be the most attuned in the world to what's happening with inflation. They're very skeptical about the Fed's ability to control inflation. So that's ultimately the question is, are they already building the future inflation into today's price? Or are they going to be surprised? If they're surprised, then we're going to see jumps in both gold and silver. Generally, probably silver more than gold.
Absolutely. And there's so much chaos in the markets right now, Peter. And you're looking at, like, we're watching Powell very closely and what he's about to do next. What do you think he's going to do next? Do you think that eventually, within this year or within the beginning of 2024, they'll take a pause or a reduce, or are they trying to crush something?
Yeah, I think his biggest fear is the inflation. So, the goal of the Fed is not, it's not really the economy, it's
Mm,
political, right?
right,
The Fed
right.
wants to keep its power, and it knows that the fastest way to lose that, the fastest way to get a leash put on it is to let inflation keep running. So
Mm,
Powell really, really fears inflation. I don't think he's going to start cutting until, until we get absolute proof. The biggest thing that has not budged yet is what's called core inflation. And that's inflation excluding food and energy. And that is the number that the Fed really takes seriously. And that
mm,
has barely budged. Like if we go back to the peak of inflation, it was almost at double digits. Since then, core inflation has only come down about 0.5%, right? The main reason why Biden is taking a victory lap on inflation is because energy came down, and energy mainly came down because the world digested Putin's war,
right.
and because a slowing global economy, China's slowing down, they don't use much oil, the price goes down. So those were all kind of one-off gimmies, and so the Fed is still very nervous about that core inflation, and unless that comes down, Powell ain't cutting anytime soon.
Yeah, and you absolutely nailed it. And we're a lot of topics on what's happening next on CBDC has come up on the forums lately, and it's super. It's concerning on what's happening because a lot of countries are pushing this push. Even Amazon is doing their own type of cashless, fingerprint push where
Yep.
you can buy stuff with just the palm of your hands, and it's really concerning on privacy. Where do you think this is heading? Do you think the American people or people in the West will just accept a cashless CBDC, or will there be like massive pushback?
Yeah, I think it's really critical that people like you and I, people in the audience, that all of us talk about this,
Right.
because if there's not public awareness, basically every time CBDCs are polled, there is almost universal opposition to them. I mean, like 80 or 90%. It is off the charts, right? I
Mm,
mean, like cholera polls better, right? Everybody hates the CBDC. The problem is that if we go back, the closest parallel is probably the Bank Secrecy Act in the 1970s, which imposed this totalitarian surveilling control mechanism on top of the banking system. That's what Trudeau used against the truckers, right?
right.
That thing came on with like no public discussion. Okay. That nobody even debated it.
Yeah,
Right. They were
nobody.
just like, oh, yeah, yeah. This is a modernization of the pipes, whatever. Right. So I think the absolute key here is that if we don't make noise, it is guaranteed to get a CBDC that will then take that bank secrecy leviathan and put that on all money in existence, right? So that's an absolute disaster. So we got to make noise. If we make noise, everybody agrees with us. Okay, 80-90% of the population agree with us. So I think it's absolutely critical. That's like one of the points of leverage where, the gold community, the freedom community, those of us who are skeptical of government
Mhm.
really have a chance to make a difference.
Yeah, and I believe, of course, having silver and gold is the one way out to completely stay away from any CBDCs or just having
Right.
hard assets or just anything away from the system. My concern is, of course,
Absolutely.
them tying it to like a carbon credit or anything like that.
Oh, they will.
Oh, I
Yeah.
know.
Yeah. Yeah. They want the whole thing to be this like matrix. It's like a fly falling into a spider web, and you can't get out of it, just one after the next after the next.
Yeah, no, it's absolutely brutal.
But the saving grace is everybody hates it.
Yeah,
Okay.
yeah,
And there are
yeah.
still
Nobody wants to
democratic
accept it.
elements to our country. So
Yeah.
yes, they'll impose it. And the Soviet Union had a heck of a lot of layers. Okay. That was real hard to break out of it. And guess what? It took about a week and a half. All right.
Yeah,
So
yeah.
when people are pissed off, they'll throw the whole darn thing away.
Yeah, absolutely. Yeah, well said. That you nailed it. Well, I want to thank you so much, Peter, for coming down to Wall Street Silver and
Yeah, of
speaking about
course.
all the topics. It's such a huge pleasure. And of course, everyone in the audience, thanks you for doing your daily uploads to the channel. It's a huge pleasure. So thank you so much.
Thank you. I love doing them. So I'm just
Yeah.
honored that people watch.
Yeah, awesome. Okay, talk to you soon. And hopefully in the next 2-3 months, we'll be watching Powell closely. We'd love to have you back on.
Awesome. Thanks, Avi.
Awesome. Talk to you soon.